So now, like I told you guys earlier, we're going to be looking at top-down analysis today. And what is top-down analysis? Top-down analysis is more or less a multi-time frame analysis. Do you understand? We're using various time frames to basically look at how we can analyze the markets. Now, a couple of times I've had students ask me, or I had people ask me, which is the best time frame to use? What time frames do you use? What time frames can I mark out my zone from? Do you understand? Just now, someone asked if we could use the 15 minutes time frame to make our entry. Do you understand? So all these things are questions that arise from time frames. So because of all these questions and then confusion, and I think the biggest one is opening my chart and then coming to my chart and then I'm seeing that I'm on the 1 hour time frame, I'm on the daily time frame, and then I don't really know whether I am supposed to be using that time frame or what am I even supposed to be using that time frame for. Do you understand? So top-down analysis basically solves that problem. Do you understand? Like I told you guys, top-down analysis is a multi-time frame analysis. How can we marry time frames together? How can we use different time frames to make analysis in the market? Hope you guys are following. That's what top-down analysis is. Do you understand? So now, one thing about, like I told you guys here, what we'll be looking at, or what top-down analysis is going to be answering the most is what time frames to use and then what to use them for. What time frames to use. And then what to use them for, or rules or tax for each time frame. Tax for each time frame. Do you understand? We'll be looking at what time frames to use and then tax for each time frame. So now when it comes to what time frames to use, the time frame you use as traders here, or depends on the kind of trader you are. Do you understand? You don't expect a swing trader to be using the same time frames as what? A scalper. Do you understand? So like I told you guys, depends on the kind of trader you are. So we have different types of traders in the markets. We have positional traders. These are basically long-term traders. These are traders that hold trades for months or even years. Do you understand? Then we have swing traders. Now, what are swing traders? Swing traders are basically short-term to long-term traders. These are traders that hold their trades for weeks or even sometimes months. Do you understand? For days, weeks, highest months. Do you understand? They trade the higher time frames. Then we also have day traders. So day traders are basically people like me. Most times I see in the market nothing more than, let's say, 48 hours. Do you understand? Within 48 hours, my trade is supposed to either hit stop loss or take profit. Do you understand? So day traders are more or less short-term traders. Then the next is scalpers. Now, these are the lower time frame traders. Do you understand? This one requires a lot of focus, and then you really need to know what you're looking for, because the lower time frames are actually very, very manipulative. Do you understand? If you don't know what you're looking for, it can get really, really noisy on the lower time frames. Do you understand? Now, like I told you guys, these different traders have different time frames to use. So for positional traders, or let's start with scalpers. So for scalpers now, we have the 1 hour time frame. We have we have the 15 minutes time frame, and then we have the 5 minutes time frame or 1 minute time frame. 5 minutes or 1 minute time frame. Then for day traders, we have the 4 hour time frame. We have the 15 minutes. So yeah, the 1 hour time frame. 1 hour time frame. Then we have the 15 minutes or 5 minutes time frame. Then swing traders. Swing traders, we have the daily time frame. That's 1 day. The daily time frame. We have the 4 hour time frame. Then we have the 1 hour time frame. Then for positional traders, we have the weekly time frame. We have the daily time frame. And then we have the 4 hour time frame. Do you understand? So these are time frames that are more or less suggested for different traders to use. Do you get? Now, Another thing is you can't just, or some people now, the next question becomes, how do I know what type of trader I am? Do you understand? So now, the trader you are depends on you as a person. Now, there are certain things you have to factor in before deciding what type of trader you are. Please, are you guys paying attention? Are you guys with me? Can you guys hear me?
Yes, can hear you.
So now, the next question becomes, how do I know what type of trader I am? Do you get? Now, to know what type of trader you are, you have to look at certain things. First is the time you spend on your charts, time spent on charts. The next one is risk appetite. Then the last one is your lifestyle. So now, when it comes to time spent on charts, if you're someone that hardly opens your charts in a day, do you understand? Like you stay on your charts, let's say you have work. Do you understand? You have work because there are some guys I teach and then they have work, and then maybe you have just chance to look at your charts once or twice a day. You have no business becoming a scalper. Do you understand? Because you cannot keep up with the lower time frames. The lower time frames, price basically moves, how will I put it, constantly. In an hour, you can get 1 to 3 opportunities. Do you understand? And then if you're just looking at your charts once a day, you can miss almost all the opportunities in the market, or almost all the opportunities in the day. Do you understand? So you cannot be spending less time on the charts and then wanting to trade the lower time frames. You can only do maybe swing trading or even positional trading. Then the next one is risk appetite. Now, all of us here, we have different risk appetites. Risking 1% might be a small thing for someone like me. Do you understand? But then for someone like Alfred now, risking 1% might be a big thing. Do you understand? You want to risk maybe 0.5%. Do you get? So if you're someone that risks much, let's say you have an account of $1,000. Do you get? And then you want to risk $500 per trade. You cannot go to the 1 minute time frame and then say you want to risk that $500. Where within 1 hour I have more than 5 opportunities. What if those first opportunities are actually losing opportunities? Then you've lost all your money. When the winning opportunities come, you don't even have anything to use it to trade. Do you understand? So if you have a high risk appetite, then trade the higher time frames. Do you understand? But if you don't have a problem risking low, then you can trade the lower time frames. Then another one is lifestyle. All of us here, when it comes to lifestyle, it's more or less the patience aspect. For someone like me, I hardly wait for things like, oh, let me wait 2 3 days. Do you understand? For something to come or for something to actualize. I hardly do that sort of stuff. So I cannot say I want to go and trade the lower time frames. Do you understand? Sorry, I cannot trade the higher time frames. I cannot say I want to do swing trading. Do you understand? Because I cannot go a day. Let's say I take a trade. Almost every 1 hour, I'm looking at my trade, or every 30 minutes, or even 5 minutes. Do you understand? So I cannot go and hold one trade for 1 week. I feel pass out before the whole trade even actualize. Do you understand? So you have to factor in your lifestyle too. If you cannot wait for something to actualize, trade the lower time frames. But if you don't have a problem waiting even weeks, months for a trade to actualize or to play out, then you can trade what's the higher time frames. Do you guys understand? So you can look at these 3 headings and then decide, okay, this is the type of trader I am. I am either a positional trader, a swing trader, a day trader, or a scalper. Do you understand? Now, we've looked at the whole point of what time frames to use. The next question now is, what do I use these time frames for? Do you understand? You cannot just wake up and say, I'm using the weekly time frame, the daily time frame, and then the 4 hour time frame. What are you using those time frames for? If you go to the 4 hour time frame, what are you using it for? That is very, very important. Do you guys understand? So now, let's take a look at the rules for each time frame. Rules for each time frame. So now, as a trader, do you understand? No matter the type of trader you are, you need to have a directional time frame. You need to have your mid time frame. Your mid time frame. You also need to have your entry time frame. Now, what is your directional time frame? Your directional time frame is basically where you look out for the main trend of the market. You look out for the main direction of the market. Do you understand? That's where you decide whether you are going to be bullish or bearish, or that's how you know whether the market is what, bullish or bearish. The next one is your mid time frame. Now, on your mid time frame, you're basically getting zones where you can what, enter the market or join the market. Do you understand? You're looking for zones where price can come back and what, retest, or you're looking for where you can what, enter or where you can trade. Then your entry time frame now is basically once price gets to your zone. Do you understand? You drop to your entry time frame. This is usually a lower time frame. Do you understand? You drop to your entry time frame to look for what? Your entry confirmations. This can be candlestick confirmations or market structure confirmations. Do you guys understand?
Yes, I will really understand. I understand you, sir.
Good. So now, for let's take like a day trader here. A day trader now we said use the 4 hour time frame, 1 hour time frame, and then 15 minutes time frame. Your 4 hour time frame, your 4 hour time frame is going to be your directional time frame. Your 1 hour is going to be your mid time frame, and then your 15 minutes or sorry 15 minutes or 5 minutes time frame is going to be your entry time frame. Do you understand? So when you get to the 4 hour time frame, you're looking at the chart like, is this market bullish or bearish? So the 4 hour is giving you an idea of the direction of the market. Then your mid time frame now, you're looking for zones. Do you understand? And then your entry time frame now, once price gets to your zone, you're looking to what? Execute your trade there. You're looking to get your entry confirmations there so you can execute. Do you understand? Is this process that is called the top-down process? We're starting from the top and then what? Coming to the downside. We're starting from the bigger time frames to what? The smaller time frames. Do you guys understand this stuff? Do you guys understand?
Yes, sir. It's
Good.
very explanatory. Because before I was finding it very difficult.
Okay,
Because
okay.
whenever I'm trading, I will be making use of one time frame, and my trade will just mess out.
Good,
I don't
good,
even know.
good. So now what we're going to do now, yeah, we're going to take an example. So we would first use a day for a day trader, because I guess most of us here are day traders. Do you understand? So let's look at a day trader. Let's which currency pairs do you guys want me to use to analyze?
Use a GBP USD.
GBP USD. No, GBP USD is actually ranging. But then let's take a look at it. GBP USD. Now, for a day trader, like I said, yeah, your directional time frame is your 4 hour time frame. So let's say as a day trader now, I come to my chart and then the first chart I see is the daily time frame. From the understanding of top-down analysis, I know that I have no business with this 1 day time frame. Do you understand? I have no business with this daily time frame. Where I'm supposed to be is what? The 4 hour time frame. That's where I'm starting out from. Do you understand? Now, what am I looking for on this 4 hour time frame? Now, let's analyze this market properly. Honestly, I'm tempted to say this market is actually ranging in the sense that price pushed up, we created a high, price pushed down, sort of, and it looks like price actually broke it to the downside. Do you understand? So we're more or less bearish. Price has pushed up to create a lower high, and then it looks like price is selling to the downside. Do you understand? So what am I going to do next? We'll go to the 1 hour time frame. Now, on this 1 hour time frame, I'm looking for where can I get zones where I can enter this market. Since the 4 hour time frame is bearish, do you understand? One sec. Since the 4 hour time frame is bearish, we have this high here, and then we have this low here. Do you understand? So currently this market is ranging. So what can I look out for? Since the 4 hour time frame is bearish, what I'll look out for is price come and then break to the downside. Now, if price breaks this market to the downside, I have a zone where I can potentially look for a retest and then a continuation. So if by chance price actually comes back and then taps into that my zone, what I'll do is we'll drop to the lower time frame to look for an entry confirmation, either market structure or candlestick confirmation. Do you guys understand? So now let's take a look at another example. Let's take a look at something like let's say Euro USD from a scalper's perspective. Now, For a scalper, we said that the time frames to use are what? The 1 hour time frame, the 15 minutes time frame, and the 5 or 1 minute time frame. So now let's look at this from a scalper's perspective. So now as a scalper, if I come to my chart, the first chart I want to go to is what? The 1 hour time frame. So now on this 1 hour time frame, you can see that this market is actually giving us bullish sentiments. Do you understand? This market is giving us bullish sentiments in the sense that price basically pushed up. Do you understand? And then created a higher high, and then now it's pushing back down to create a higher low. So now let's drop to our 15 minutes time frame to look for zones where we can potentially catch a trade from. Now going to the daily time frame, sorry, going to the 15 minutes time frame, you can see that price is sort of okay. Price basically created this higher high, pushed back down, and then it broke to the downside. So it's looking more or less like price as what? Price is pushing down to create a lower low. Do you understand? So what can we look out for? We have this high here. We have this high here. So now what are we looking for at this high? What we're looking for is price come and then break this high to the upside. Now, once price breaks this high to the upside, we have what? A resistance that has a potential to turn to the support. So what we'll be looking for is a retest and then what? A continuation. Do you guys understand? So who has any questions?
Yes. Okay, so I have a question.
Yeah, what was the question?
Okay. My question now is that in the highest time frame now,
Yes.
that is the direction of the market we will be following, not
Yes.
the middle time frame.
Okay, so now there are some peculiar examples I want to show you guys. So let's go to something like NZD USD, AUD USD. One second, I'm coming. Let's check NZD USD. One sec. I want to show you guys something. Let's go to the 1 hour time frame. Sorry, the 4 hour time frame. So now, if you look at this market currently at the 1 hour time frame, you see that price was more or less looking like a range. Do you understand? But then price was pushing down. Do you get? So if you go to the 1 hour time frame, this market was more or less bearish in the sense that price just created lower low, lower high. Do you understand? And then another lower low. So what I'm looking for is more or less a retest and then a continuation. Do you understand? So which zone can I look to actually sell from? See here, we have what? A support level that has just been broken. Do you understand? So what we're looking for is more or less price come back, retest, and then what? Let's sell to the downside. Now watch how price behaved. Let's see. See price. See as price tapped that zone. Do you understand? The moment price tapped this zone now, what we'll do now is drop to the lower time frame and look for what? Entry confirmations, which can be either candlestick or market structure. If it's candlestick now, we're looking for a bearish pin bar. Do you understand? We're looking for a bearish pin bar, which up to now has not played out. Let's see. Did we get a bearish pin bar? We have not gotten a bearish pin bar yet. Okay, we now actually get a bearish pin bar. Do you understand? But then if I actually got a bearish pin bar now, that will be your entry confirmation. Do you understand? I'm going to be talking about these entries and entry confirmations more in our next session. Do you understand? These entry confirmations, I'm going to be talking about it more in our next session. Any other question? Any other question?
Okay. So what I want to say is that this strategy is just like break and retest. Wow, it's more
Okay.
powerful.
Yes.
Wow.
The strategy I use mostly is break and retest.
Wow. Okay, thank you very much. It's very, very explanatory.
No
Wow.
problem. No problem. Do you have any other questions, guys? Any other questions?
And I want to ask a question. What
Yeah.
if they what if they release a news? Because at
Yes.
times the news used to mess up the trade at times.
Okay, so one thing is most times you just do your top-down analysis and then sometimes price will actually push that in your direction. Do you understand? Just do your technical analysis. Do you get? Or if you don't want to trade the news, then you can just exit your trade before the news. Just like last week, I was actually in a trade and then the news came out and then pushed me out. It took me out with my stop loss. Do you understand? So you decide for yourself. Either you trade it or you leave it alone. Do you understand?
Okay, sir. Thank you very much, sir.
No worries. I'll catch you guys next in our next class.
Okay, sir.
So,
God bless you.
yeah, have a very wonderful weekend, guys. Have a very peaceful weekend ahead. And then for those that be watching this video on YouTube, please like and subscribe to the page. I'll catch you guys in the next session. Bye, guys.
Okay.